What is going on with the economy? Are we in a downward spiral? Is it the double dip? Here to explain it to us is INSEAD economics professor Antonio Fatas. Thank you for joining us.
Thank you.
All right, is this the double dip?
I'm still optimistic, although it's true that my optimism keeps going down over the last weeks. I'm still optimistic that we won't see a double dip. We might see a period of growth which is below what is normal, below what you would expect of a normal recovery, but I don't expect yet another recession coming over the next quarters or even years.
So the gyrations that we saw in the stock market and some of the rather negative job figures, well, really everywhere, but I'm looking specifically at the U.S. since that seems to be dragging everybody. That's not a sign of a recession.
I think it's a sign that things are going slower than most people anticipated. I think this is a special recession. It's a recession that we knew we would not have a very strong recovery. And whenever we get news that confirm that this is not a strong recovery, sometimes you have a reaction that interprets this bad news as something completely different from what we should expect. But I think this is within what is expected in a recovery that comes after such a deep recession.
Are we in a panic?
I think there's always panic. There's always people are looking for news, people are looking for information, and it's not that difficult that people sometimes overreact. Sometimes they overreact and they're too optimistic, sometimes they overreact and they're too pessimistic.
Now, in concrete terms, the Federal Reserve had a quantitative easing policy whereby they injected money into the economy by basically buying T-bills and hoping to lower long-term interest rates, presumably to get people to buy houses. Yep. That hasn't happened. It seems as though, to a layman, like they just wasted the money. Did they?
I think it's always very difficult to assess whether a policy has worked or not, because we always have to understand what would have happened if they had not done it. Now, my belief is that if they had not done what they have done in terms of quantitative easing, we'll be in a much deeper recession. So from that perspective, it has worked. Now, if what we expect is a miracle, that by the Federal Reserve buying government bonds, the economy is going to start growing at 3-4% this year, that's, I think, obviously has failed. That has not happened. But I think maybe that's too much to expect from the Federal Reserve.
Has Ben Bernanke, in your opinion, taken the right move by leaving? He's announced that he was going to leave interest rates just where they were for 2 years. He'll take whatever opportunities there are to improve. What options does he have left? Is he on the right track?
I think broadly he's on the right track. I think he doesn't have a lot of ammunition left. Obviously, since interest rates reached zero a while ago, there's not much else you can do with interest rates. Now, he's been providing the liquidity that the economy needed to stay alive and not to go into another recession or a depression even. But I think beyond that, the most he can do at this point is use words, communicate, and try to influence the mood of the economy and maybe the expectations so that the economy starts recovering.
What options are left?
I think we reach a point which maybe is bad luck, which is we're coming out of a recession which we knew would be difficult. And at the same time, everyone has realized how difficult the public finances were in many countries. And we have these government's actions which are going against the recovery, which are happening because, of course, the debt levels are very high in many of these governments. Now, the best I can imagine that could be done differently is that maybe some of these plans for austerity and try to address the debt problem are postponed for a few quarters, maybe a couple of years.
So how do you then increase or create jobs or engender growth while keeping a handle on government debt?
I think what needs to be understood, the government debt problem is a long-term problem. It's not a problem of 2011, 2012. It's a problem of the next 8 decades. And what you need is a framework that says over the next decades, we, the government, are going to behave in such a way that will keep this under control. Now, that's not easy, given how politics works, given that there are elections every 4 years. It's hard to talk about a long-term framework, but that's what is needed. There's absolutely no need to cut spending today or to raise taxes today. The need is to have that framework that says over the next 80 years, we'll do a good job, as opposed to over the last 3-4 decades.
But everybody's so anxious. I mean, in the UK, they want to make a huge cut in the deficit in 4 years, which seems almost impossible.
It is impossible, and I think that's a reaction to two things. One, sometimes markets seem to be asking for more, and politicians feel that they need to do more than what they're doing. And second, you have the usual ideological discussions about what the role of the government should be, and certain parties will take advantage of this crisis to try to impose their views on society. So those who like small governments, they'll try to push for an agenda now, which is cut spending, reduce government size.
Meanwhile, jobs aren't being created and nobody's really taking care of the social aspect.
Correct. If obviously with that type of policy, we're not helping at all on the unemployment front.
What would it take to help on the unemployment front?
I think at this point, the two things one can do. One is in most of these economies, we're suffering from low demand. So we have a crisis of demand. So by the government being a little bit more aggressive on fiscal policy, which is a little bit the opposite than they're doing, I think it could obviously help the labor market. The other one is try to understand in some countries you have not just a lack of demand, but you also have a mismatch between workers and companies that need to hire. Some sectors have disappeared, other sectors will have to come up. So we need also labor market policies that bring some of these people back into the labor market.
Training and things like
Retraining, et cetera, et cetera.
Right. Is Europe's debt situation as bad as it's being reported? Or is it sustainable given what you just said?
It's all relative. I think European governments are facing one of the biggest challenges they've ever faced in terms of their debts. And in some cases, some governments are going to have to do very large reforms to bring debt in a sustainable path. At the same time, from an economic point of view, the type of adjustment that needs to be done is doable. Where we're failing is on the political side to find an agreement on how to do that adjustment.
It seems as though the countries are facing their debt crisis as individual countries, and yet the euro and expansion tends to benefit the entire European Union. So how come we're not doing Eurobonds?
I think the Eurobonds are a little bit more complicated than what it looks like. To launch a Eurobond, what you have to do is to say, look, all the taxpayers behind the euro are responsible for the spending of any country in the euro area. Now, that's something that probably is illegal, given the constitutions and the legal systems in all these countries. And politically, if this was to put up to a referendum, I'm almost sure that it will be voted down in most countries. That will require, it's not just a technical issue in the Eurobonds, it's not a technical matter, it's a political matter, saying you, the taxpayer in France, in Germany, in Italy, are responsible for the spending of Greece, Ireland, Spain, et cetera, et cetera.
And on an emotional level, that's not going to get very far.
That's not going to get very far. And it makes sense. I think countries that sign up for the euro did not sign up for that. This is a debate that will take many, many years to happen. And I doubt, even if it happens, that it will be resolved in that direction.
There's been a lot of talk about downgrading. I mean, the US being downgraded, Japan now being downgraded. I mean, how important is this?
I think it's important in the sense that these governments face a challenge, which is a massive challenge, especially from a political point of view. What is interesting is how much we talk about this today and how little we talked about it over the last 20 years. Economists have been talking about the debt crisis for more than 20 years now. When I teach my macroeconomics course, I've been talking about debt crisis for more than 15 years now, and it seems to be that now it's a surprise. To me, it's not a surprise. So a downgrade here and there, it doesn't change that much my perspective. Now, having said that, obviously I'm pessimistic in the sense that there's a lot of work to be done, and I don't see governments reacting fast enough.
Let me end by asking you what you see ahead of us. Now, I realize it's difficult to look even maybe 6 months, but I want you to look maybe about 3 years or so. What are you most worried about? What do you think are the good things?
I think I'm worried about two things which could come together. One, if governments insist on having very restrictive fiscal policy over the next 3 years, that is going to be bad news for the economy.
You mean cutting the debt?
Cutting the debt, cutting spending over the next 3 years. And if in addition that leads to some sort of panic in financial markets and investors, et cetera, we could go into another recession. Now, I still remain optimistic that that will not happen, partly because I think fiscal policy will be more reasonable than maybe what we've seen over the last 6 months. And as the recovery picks up slowly, we might see less of a panic. But there is this real possibility that we go into another recession if those two things get combined.
Anything that might be good?
I think the world has been doing well. If you don't focus on any other country, the world has not done that badly. In the last 10 years, 15 years, I think the world has been able to grow fairly fast. So if you look at the economy at the world level without looking too much into one country, I think we've done well over the last decade, and hopefully that's what we will see over the next decade as well.
And has there been a shift to the east now? Are we really looking at the BRIC countries?
Certainly in those last 10, 15 years, the countries that have done the best are the countries that we call emerging markets. But again, all countries benefit from growth. So it's in the best interest of advanced economies to see those emerging markets growing again at a very healthy rate over the next 10 years.
Thank you very much, Antonio Fatas, for being with us on INSEAD Knowledge.
Thank you.